Good morning and welcome to the inaugural Global Sovereign Green, Social and Sustainable Bond Issuance Forum by OMFIFs Sovereign Debt Institute. This follows a series of GSS issuer workshops we held in 2022, helping EM sovereigns enter the GSS bond markets. These workshops will continue next year, focusing on the CE, Africa and LATAM region. I'm Burhan Kadbai, Head of Content at OMFIFs Sovereign Debt Institute, and I'll be moderating the first session of the day, looking at speaking to recent debut sovereign issuers of GSS bonds. Joining me, we have a panel of three issuers in no particular order. We've got Andreas Hugard Christensen, Senior Treasury Manager, Government Debt Management at Denmark's National Bank. We've got Kim Martin, Head of Debt Management at the Treasury of New Zealand, and Marcus Stix, Managing Director at the Austrian Treasury. For our virtual audience, please do submit your questions via the Slido app, and I'll try to answer as many as I can at the end. But we also do have a dedicated Q&A session at the end of the event. Firstly, thanks very much to my panel for joining us today. I just want to go around firstly asking each issuer why you decided to issue a GSS bond now and how that fits into your strategy. Perhaps, Kim, do you want to start first, as you were the most recent debut issuer on this panel?
Yes, good morning, good evening. It's evening here in New Zealand. So we issued our first bond on the 15th of November, so quite recently. And we've been engaging with investors on GSS issues for many years now. And historically, our approach was to do this by highlighting the government's credentials and policies alongside our generic bond issuance. And so we see a labelled bond as a complement to that rather than a replacement of that approach. But we do see several benefits of a green bond program. First, promoting improved environmental outcomes due to the increased transparency, monitoring and reporting that's associated with the programs. Second, in future, we anticipate that the expenditure that's potentially eligible for the programs will be flagged early in the budget process, before the budget decisions are actually made, and this may provide potential for increased focus on environmental outcomes in the budget decisions. And then, of course, there's the additional factors such as broadening the investor base or providing benchmarks for other corporate issuers, for example, to issue sustainable bond products. So that's some of the key reasons why we've gone down this track recently.
Great, thanks, Kim. And Marcus, the same question to you. Why has Austria decided to issue a green bond now? And how that fits into your strategy?
Good morning to everybody, and thanks a lot for the question. Yes, if you look at the situation in Austria, there was not a big pressure from the investor community to enter the green bond market, but on the other hand, in Austria, these are very important topics if you look at environment and especially climate actions. And Austria shows this and demonstrates this with a very high share of renewable energy sources. But on the other hand, we have a lot of a high portion of green eligible expenditures in our federal budget. And that's the reason why we decided together with the Ministry of Finance to go ahead with this project to earmark special expenditures at the moment only in the federal state's budget for green financing. And it is, if you look back, we issued our first green bond in May this year, a clear strategy to have, beginning from this day on, a two-pillar strategy. On the one hand, conventional financing instruments and the green instruments. And why I mentioned green instruments and not a green bond instrument, because our framework included not only a bond facility, it allows us to have bonds, loans, treasury bills and commercial papers. So nearly the whole financing strategy and the whole instruments we use for the conventional bond as well for the green instrument. And so we have a two-pillar strategy going on as well for the next year, and this helps a lot to broaden a bit from the investor community and from the stress with higher funding volumes.
Yeah, thank you, Marcus. And Andreas, same question to you.
Yeah. So I think the main reason for issuing a green bond on our end has been that we have seen an increased demand for this in the investor community, and especially also the domestic pension and insurance sector. They have a huge demand for a product like this, and we also saw it as a good way to increase and diversify our investor base as well. I mean, that being said, I think in some countries it has been political pressure that has started the issuance of green bonds. You have seen that in Sweden, for example, and also other countries. But in our case, it was on our initiative in the DMO. So we sort of anticipated that there may come a political pressure someday to issue green bonds, and we wanted to get ahead on that. That pressure never came, but nonetheless, we decided to issue green bonds anyway, because we thought it was a good idea. In terms of our overall strategy, I think from day one it has been a concern for us to introduce a green bond, because our concern was that it could hurt liquidity in our existing bond series, and that's just not only including green bonds, but in general, you know, including a large number of products in our strategy. So I would say that in general, our strategy is to limit the number of ISINs that we issue and focus issuance in a few number of ISINs, given the very low debt level that we have. So, I mean, going forward, we will continue to issue green bond, I believe, but it will be, you know, a small part of our total issuance program also going forward. Okay, great, thanks. And I just want to move on now to talk about the experience of setting up your green bond framework, which I think will be quite helpful to the second panel, where we've got the issuers that are planning to bring a debut GSS bond, as well as we might have debut, potential future issuers in the virtual audience as well. So maybe come back to you, Kim. What was the experience like of setting up your green bond framework? What taxonomy did you go for, and what advice did you seek, and from who?
Yeah, thank you. And I'll just pick up on a comment from Andreas. In terms of why now, liquidity was really an important issue for us as well. And so it was almost due to the increase in our program as a result of the COVID response that our volume is now much larger. We have a lot greater volume of bonds on issue, that we had greater confidence that we could issue this new product and not risk undermining liquidity in our core products as well. So last November, it was clear that we had support for a program both from the Treasury, the Minister of Finance, Minister of Climate Change, and so it was in November we announced the intention to issue the first sovereign green bond. And the work was to be done by our team, debt management, within the wider Treasury. And so the experience from there, first of all, we're extremely grateful for the insights from other issuers who had gone before us. We had a lot of calls, and we're very pleased with the kind of openness that was provided by other sovereign issuers. We also got advice. We nominated 2 joint structuring advisors, so essentially sort of banks, to come on board quite early and help us through sort of the 9-month process to issuing the framework. We then engaged, as most issuers do, a second party opinion to help validate where we'd got to with our framework. And I think importantly, we realized early on this was going to be a bigger task than we may have initially anticipated. So we set up a dedicated green bonds establishment team. And that was a team of around 7 staff who were entirely focused on this project, getting us to the first issuance, which occurred, as I said, last month. And in terms of the framework and the taxonomy, the framework is essentially aligned to the Capital Markets Association, the internationals and the ICMA principles, but we're not specifically aligned to any other taxonomy, for example, the EU taxonomy. We also demonstrate alignment to the UN Sustainable Development Goals. as well as to our own government's climate and environmental agenda.
Okay, great, thanks. And I think you bring up a good point about the liquidity, because I think that's an issue that all investors have with green bonds, particularly from perhaps not large issuers. I mean, did that come up in your meetings with investors about the concerns about the liquidity of your green bonds?
So the feedback we do get from investors is these bonds may inherently be held by investors who are more inclined to buy and hold. We haven't yet got the evidence, but we're going to be following our secondary market turnover data with great interest. So we collect that on a monthly basis from our registered banks, and we'll be able to see if there is indeed any difference in the turnover between this bond and our other bonds. But that's certainly feedback we've had that other investors have observed. And so I think having a volume on issue, and also confidence about the volume of underlying expenditure, so that we could be confident of building up a bond line of a minimum viable size to promote liquidity, was important to us.
Okay, great. Thanks, Kim. And Marcus, the same question to you, the experience of setting up your green bond framework. Could you sort of go into that, the taxonomy you went for, and what advice you sought?
Yes, sure. Indeed, as New Zealand mentioned, to set up a framework is a lot of work. And it's very crucial, in our point of view, to onboard the numerous stakeholders and the key ministries and the key entities which you need for identifying all the projects and setting up the framework. So in Austria, we onboarded 5 key ministries and 5 key entities, like the Environment Agency in Austria or the Federal Railway Infrastructure Company. And we did this all within a period of 9 months. And after this, the formation from the working group with the 2 structuring advisors, which we mandated, JP Morgan and UniCredit, they helped a lot in the overall process because it was our inaugural framework. And after all the drafting from the framework, it's very important to mandate a SPO provider, because that's an external improvement from the framework for the investor community. We decided to go with ISS ESG, one of the strictest SPO providers. And at the end, it's time to do investor relations, on the one hand with a green investor presentation, with a press conference together with our Minister of Finance, followed by a global investor call, and a lot of roadshows, on the one hand on a physical format, but as well on a virtual format. So in Austria, it was a deal-related roadshow just in front of the transaction. And we meet more than 30 one-on-ones investors to speak about the framework and as well about the forthcoming transaction. So overall, it is a really intensive project. It's one of our intensive projects in the past. But at the end, I think the result is really helpful for the federal budgets and for the awareness of this very important topic. Our framework is based on the ICMA principles, the same as for New Zealand. We tried to be as much as possible aligned with the EU taxonomy. But due to the fact that it is not finished now, it is not possible to have it on a legally binding basis. And indicatively, all our expenditures, we can say that around 70% of the eligible green expenditures demonstrate EU taxonomy alignment.
Okay, thank you, Marcus. And Andreas, what was the experience like for Denmark? And can you sort of go into your taxonomy as well?
Yeah, so I think in our case, it has been a very long process. I think New Zealand mentioned 9 months. I think for us, it took 2 years. So it may be the longest of anyone. I guess it also, in our case, has to do with the fact that we as a DMO are located in the central bank and not within the Ministry of Finance. So the Ministry of Finance, they are formally in charge of setting up the green bond program and the green bond framework and so on. But yeah, in reality, we are very much involved, of course. But some of the things that sort of made the process a bit slower was COVID in the spring of 2020. The Danish government became very busy with a lot of other things, naturally. So there has been a lot of other priorities. But in terms of taxonomy and how we set up the framework, I think a key word for us in this process has been transparency, and this is also what we are hearing from investors, that this is very, very important. So we try to be as transparent as possible, and I think the best way that we could think of in terms of being as transparent as possible was to evaluate all of our expenditures according to the criteria in the EU taxonomy. And that includes all of those do no significant harm criteria that you have in the EU taxonomy as well. And I think that's specific part of setting up the green bond program. What was the most time consuming, because you had to involve a lot of different experts from different ministries, the Ministry of Climate, the Ministry of Environment, and so on. And for some of those guys, they are expert within their fields, but the EU taxonomy specifically, and the connection between the financial markets and the environment and so on, it's a new thing for them. So we really had to explain a lot of things to them. But I think now that you have done this once, I think it will be a lot easier going forward if you are to update the program. The process, I would assume, would be much smoother going forward. Yeah.
Okay, thanks. And I want to stick with you, Andreas, because I want to talk next about the structure of your green bonds. And Denmark have done something interesting with the twin bond concept, which has also been adopted by Germany. Can you sort of explain what the twin bond concept is and how that works and why you decided to go for that structure?
Yeah, so a part of the reason that it took 2 years was also that we were exploring different ideas how to structure the green bond. And I think essentially it all comes back to our concern about liquidity. So we wanted to see if we could have a solution where we could minimize the harm of the liquidity on the other bonds, giving our low debt level. But essentially and I'm not sure that the green twin bond concept fully solves this problem. But essentially the green twin bond concept is that we issue back in January we issued a 10-year green bond with exactly the same financial characteristics as our nominal 10-year bond, benchmark bond. So exactly the same cash flow. I mean, of course, this also makes it a lot easier to compare prices in terms of premium and so on. There's a lot of debate on this. That is one thing. And then the other thing about this concept is that we make it possible for investors at any time to switch the green bond 1-to-1 at market prices to our conventional 10-year bond. I mean, that could of course make sense if the price of the green bond were to be below that of the conventional bond. That is not the case right now. In the other case where it could be relevant is of course if you want to switch to a more liquid bond. So essentially you could get the better liquidity of our conventional bond by switching 1-to-1. So yeah, but as you said, it's a concept originally invented by Germany, and yeah, we sort of we have of course been in dialogue with them in terms of the functionality, and we also issued our bond after they came with theirs, so we had some time to see how it worked. Yeah, and I think we are fairly satisfied, but we can also say that no investors have used the facility to switch the bonds yet. but that is not a goal in itself. So I don't see that as a problem at all.
And have you seen a distinct greenium between the two bonds?
Yeah.
Okay.
We have, as I said, it's very easy to compare because they are exactly the same bonds in terms of cash flow. So when we opened our bond, we opened at an auction. That is in contrast to most other, I think, who open via syndication. It's also something that we discussed, but we ended up opening our bond via auction. And at the opening auction, we saw the highest demand in, I think, was it 12 years or something like that on one of our auctions for the bond, and a greenium of around 5 basis points. So I would say a fairly large greenium, but it has been declining in line with a lot of other EU peers after that.
Great, thank you. And Marcus, Austria, you've issued one of the longest green bonds in euros. Could you talk a bit about the structure of your green bond? You've also issued green T-bills, so one of the shortest sovereign green bonds as well. But talking about your green bond, not your green T-bills for now. Can you talk a bit about the structure of that and why you decided to go for a long tenor?
Yes, sure. The tenor with 27 years looks a bit odd, but if you look at our maturity profile and our benchmarks there surrounding this maturity area, we have a 2047 maturity and a 2051. So the maturity of 27 years means 2049 perfectly fits in our maturity profile. That's the reason why we go with the longer tenor. It's the second longest green bond after Germany 30-year transaction. And in general, why a longer tenor? Because we have a lot of infrastructure projects in the eligible expenditures, and they have normally a duration in the expenditure size that is 50 years and above. So that's the reason why we split it up from our eligible expenditures, 80% long-term funding, the 27-year, and 20% in the short-term funding, so the 4 months treasury bill. The inaugural green bond from May this year was in the size of 4 billion. With an order book of 25.4 billion, so a 6.8 times oversubscription, a strong result if you compare it with the conventional syndicate transactions. And we counted around 70% of the total allocation to green investors. In total, we had 214 different investors on board. This is clearly more than usual. And what we are really happy and what was a clear goal is that around 20% of the investors are really new investors, additional investors. And that this fits perfectly to one of our strategies to broaden further the investor base for our portfolio. And the greenium achieved in this transaction, calculated by the banks, was 2.5 basis points at the transaction at the beginning. But in our view, this is not a free lunch, because if you look at all the tasks which you have to do, the whole period of the transaction with the allocation and impact reporting, it's not a free lunch. A lot of work is to do from the DMO, but as well from the environmental agency in Austria and the ministries, that the investors will receive the feedback and the tailor-made reports for them, and not look through a balance sheet of the Republic with more than 1,800 pages and look where are the green expenditures in the federal budget. It is earmarked for them. There is a special report for them. We will have our first report in May this year, so 1 year after the announcement and the execution of our inaugural bond. So in our point of view, the greenium is absolutely in line with all the work we have to do afterwards.
Okay, thank you, Marcus. And Kim, you talk a bit about New Zealand's debut green bond, the structure, and was the greenium important for you?
Yeah, so we considered all options and we decided rather than going for a twin bond concept, we would go with a unique maturity as an infill bond within our existing curve. So rather than extending out the curve, we would place it as an infill. So we chose a 2034 maturity as being just above the 10-year mark so that we would build it up to a good volume around the point it's getting to the 10-year, and once again thinking about liquidity, trying to promote that point on the curve, which is quite popular with global investors. The pricing, we were certainly not, the expectation of a pricing benefit was by no means the key reason for doing a bond of this sort. And if anything, it would have been a side benefit. As the syndication played out, we issued 3 billion, which was the maximum volume that we were aiming for, priced at the tightest end of the pricing range. And from the research that we've seen from banks, it was suggested that it came at a greenium of somewhere between 1 and 3 basis points compared to what we would normally pay at a new issue for this type of bond. It's only been trading, though, in the secondary market for less than a month, so it's really too early to say. We have seen some spread compression, but I think it's really too early to make any sort of judgment around where it will trade relative to its surrounding bonds through time. The other thing I would probably reiterate what some of the other issues have said. We did see some new investors in the allocation in the book, which was really encouraging to see. And we also were really pleased with the allocation, both across the geography, globally, really quite diverse, and by investor type as well. So really certainly tick the box of increasing the diversity in our investor base.
Okay, great. I just want to ask about, we talked about the reception of your bonds. They all went really well, despite it being quite a volatile market for issuance this year. So what was it like issuing your debut GSS bonds, during a volatile period? Did you have to pick and choose your windows? Maybe Kim, sticking with you, was that quite difficult to pick the right window?
So I guess it always is with a syndication. The green bond was not unique in that regard. And what we do is we tend to give investors a 6-month window. We say within this 6-month period, we're intending to issue this number of new bonds. And then we close down the window, obviously, as we get closer. So we were very happy with the window we found. I think it was the 15th of November we ultimately went for. But yes, we had to be very careful and try and choose our moment.
Maybe Marcus as well. What was it like, issuing during a volatile period? Did you have to sort of be quite careful in picking the right window?
Yes, indeed. But it's not only at the green syndicate transaction, as well as the conventional transaction. And due to the fact that we have finished all our framework in May, we can enter the market end of May. So it was a good window before summer, and it was not an option for us to wait over summer and start later in September, because everybody was ready and everything was prepared already. So and the market was in this week in not a volatile situation compared to the weeks before. So therefore it was a clear green light for us to enter the market, and the investors gave us the feedback on the roadshow that this is the right point now, and therefore we entered the market at this time.
Great, thanks. And obviously you issued your the green T-bills as well afterwards, later in the year. Could you sort of explain that concept and how that transaction went?
Yeah, the whole market is speaking of the green bond framework and green bonds, and there is a rationale behind. Yes, you have traditionally long-dated expenditures, but on the other hand, you have the investor community and you have money market funds, you have central banks They are getting more and more ESG focused, and they need some investment possibilities there. And if you look at the corporate area, there are commercial paper in green format. But from a sovereign perspective, there is nothing in the short-term market. And that's the reason why we discussed a lot when we are setting up the framework with the structuring advisor, with some investors. Is this an option, or is demand for such a product? And they said, yes, clear. On the one hand, you have higher absolute interest levels at the moment, and investors are happy to invest in money market funds, so with a short-term horizon, so up to 1 year. And on the other hand, you have a huge duration in the eligible expenditures. But if you fill the missing link with rolling this product, and that's the thing we will do, and we told us, the investor community, that we will roll the issued transaction for the next 27 years on a rolling period. You can compare it like a floating rate note. So from an investor's perspective, if they want to invest in a T-bill for the next 27 years, it's up for them. We are here because we will refinance this amount, the 1 billion, from October for a 3-month period until 2049. So with the same maturity than the bond. But it's the decision from the investors and not our decision. So if the investor will not invest in the rolling period, it's up to them. But the central banks are really happy. The money market funds are really happy because they have now supply from sovereigns as well in the short-term horizon, and it helps a lot because the impact or the increase of the money market funds due to the absolute higher level is clearly increasing this year compared to the last couple of years. And if you look at the bid cover, we did the T-bill via auction, not via syndicate transaction, because this would looks not like a normal transaction. And the demand was very strong. The bid cover was 2.7 times compared to our normal T-bills, with roughly 2 times oversubscription, a greenium of 2 basis points, and more than 85% of green investors.
Okay, thank you, Marcus. And yeah, it was an interesting transaction. Obviously, you've become the first sovereign to issue green T-bills. And Andreas, what was the issuance environment like for your twin bond, green twin bond?
I mean, we issued it very early in January this year, and at that time, I would say the markets were fairly calm, at least not as volatile as they have been in other periods during this year. So it wasn't really a big concern, and if it had been a big concern, we would have, of course, have moved the opening auction. I mean, in our case, and generally, if you look at our issuance throughout the year, we don't have the same sort of timing issue, you could say, because we have our auctions bi-weekly, so our issuance is spread out more or less evenly throughout the year. So of course, each time we of course decide which bonds we will have on the auctions. But you know, if an auction is more or less successful 1 week due to volatility, it may be better the next time. But one thing that I can note is that we have seen this year, even in periods where there's been a lot of volatility and where it may have been more difficult than usual to sell our other nominal bonds, 10-year, 2-year bonds, and so on, we have almost always seen a fairly big demand for our green bond. So in that sense, it has also been a very good instrument for us this year, I would say.
Okay, thanks. I wanted to ask you a question I forgot to ask you a few minutes ago. Have you had much investors switch out of the green bond for the twin conventional?
No, none. We haven't seen any doing that. And I think, as I mentioned earlier, it is not, a goal in itself that people actually use this facility. But yeah, it's just basically an option for investors. But we haven't seen anyone doing it, and I'm not sure that anyone have used it in Germany. But yeah.
Okay, great. Thank you. I'm conscious of the time. We've got 10 minutes left, and I do want to leave some time for questions from the virtual audience. So please do submit your questions, and I'll try to answer them. But I suppose what would be quite useful, for the next panel, where we'll be speaking to incoming debut sovereign issuers of GSS bonds, and obviously there'll be sort of, potential debut issuers, incoming debut issuers in the virtual audience. Be interesting if you can give some advice to sovereign issuers that are planning to make their debut in this market. Kim, what would be some advice that you would give to incoming debut issuers? What would be some key advice that you would give based on your experience?
Firstly, don't underestimate the work and the complexity of the project and the different skills that are required beyond those which you normally have in the debt management area. And as I indicated, we had a specialist team drawn from the wider Treasury with people who had relationships with agencies and the underlying government departments that are responsible for the expenditure. Also, very importantly, if you're able to get really strong high-level support from the ministers level down, that is also very helpful. And to help incentivize and engage the agencies who ultimately have the underlying expenditure, as part of our governance group, we had some of the senior people in those agencies as part of the governance board. So they were quite motivated to help us build the project. So I think they're probably two of the key learnings. And probably a final thing I'd say is, although we're probably quite unique and we have a very broad number of categories in our eligible expenditure, I think we have 10 categories, but still to make it easier for yourself, the ongoing administration of the program, don't spread yourself too thinly. Try and get a few large categories and concentrate on those is probably also another bit of useful advice.
Is there anything you would do differently if you were to do the process again? Is there anything you would,
I'm not sure we'd do anything differently, but I would go in probably with my eyes a bit more wide open. Initially, we were anticipating we might be able to do it sort of just within our core team, sort of on the side of doing our day jobs, and it quickly became apparent that that was not going to be the case.
Okay, thank you. And Marcus, what advice would you give to sovereign issuers that are planning to make their debut in the GSS market?
I can echo New Zealand's answer. Aligning ministries and internal stakeholder as early as possible is key in such a project, and identifying the internal experts in the ministries and reaching the strong commitment for the project are key factors for this project. And not to forget, post-issuance, the reporting requirements will be an ongoing challenge with long-lasting alignment and commitment from the group, from the framework. This is more from the internal side, but as well from the external side. If we look at the ESG ratings, choosing a strict SPO provider paid off in the end. That's our experience, but it is a lot of work because they are really critical and challenge all the frameworks and the categories. In Austria, we have 5 categories. And it was a lot of work, and not to forget that the ESG investors, they have different questions, and it's not easy for a DMO to answer all the questions. So please do not underestimate the questions from the ESG investors. We set up a FAQ with more than 70 questions to be prepared for the roadshow, and it's completely different to a normal roadshow. So that's the main point, I think, from our framework and from our project.
Okay, thank you, Marcus. And Andreas, same question to you. I mean, what advice would you give to sovereigns that are planning to make their debut in the GSS market?
I would I would very much agree with both Kim and Marcus, but just not to say exactly the same again. I would emphasize one thing that Kim also said about simplicity in terms of the expenditures. So that this is something that we have focused a lot about on. So essentially, we had a very long list with expenditures that we believe could fit in our program, but we also were very strict in terms of eliminating expenditures that were too small, because you, as an issuer, you have to be aware that you also have to report in terms of impact and so on each of these expenditures. And the more diverse your green bond expenditures are, the more difficult the task afterwards. So we try to exclude small expenditures and only include, expenditures of a certain size to make the exercise of reporting a bit easier for ourselves afterwards. So focusing on quality in the reporting instead of quantity. And I think that's going to be very useful. And right now we are in the process of making those reports.
Okay, interesting. I mean, what were the most common questions you received during your marketing to investors for your green bonds? Maybe Kim, I mean, what were the most common sort of questions you received? What were the most common sort of
I would reiterate what Marcus said. The detail of and the technical details of some of the questions on how you're measuring your carbon emissions, on what are your biodiversity policies and how you're going to measure. Some of those are very, very technically specific, which is unique, obviously, compared to a normal roadshow. But then, by contrast, there's also some of the regular type of questions focus on the liquidity of the bonds, consideration of how much volume issuers can expect over the next several years. So it really was quite a contrast, and partly dependent on when you're in a specific investor meeting, who was in attendance, whether it was the generic fixed income team or whether the ESG or sustainable specialists were in there, obviously guided which type of questions you might have to field.
Okay, and Marcus, what questions? I mean, were there concerns about liquidity in Austrian green bonds? Did that come up in your meetings with investors?
In general, liquidity is always a question. And as Kim mentioned, it depends a bit who you are dealing with. Is it more the gate opener, or is it more the portfolio managers who are discussing the framework and the transaction? If you're discussing with the gate opener in the company, it is clear that it's getting more technical and out to the projects and detailed questions to the project. If you're coming more with the portfolio manager, it's more a discussion of the timing, the liquidity, the tenor, and how do you proceed further? Do you have plans to tap the new bond, or do you do a new syndicate transaction? How is your strategy on this? So it differs a bit on the person who you're discussing with.
Okay, great. And Andreas, I guess there were a lot of questions about the twin bond concept, but were there any other particularly technical questions that you received in your meetings with investors?
No, I think the main questions were about the twin bond concept. But as Marcus said, it's also depending on who you're talking to, so portfolio managers and so on. They had a lot of questions about that. Other investors were also bringing teams of ESG experts, so they had a lot of specific questions about the expenditures. The way we went about this was that we had the experts in the ministries preparing us, giving us notes and so on, and then we also had a big joint call where we brought the experts from the ministries and also guys from the Ministry of Finance, so that investors with very specific questions to expenditures, they could get all the questions answered. But it varies a lot, I would say, depending on who you're talking to. I mean, some investors in terms of ESG are very sophisticated, some are less. So yeah. Okay,
great. I can't see any questions coming through yet, but we will have a dedicated Q&A session at the end of the event. So please do send your questions there. I suppose lastly, wrap things up, what are your projections for issuance? Are you all going to be frequent issuers of green bonds? Are you going to build green curves? Maybe Andreas, just sticking with you, will you be a frequent issuer in this market?
I mean, the strategy is certainly not that this was a one-off. So the strategy is that we are continuing to issue green bonds going forward. But as I also mentioned in the beginning, it's not. I don't see it exploding in size, because we also have the concern of liquidity, and we are still focusing on building up our other benchmark bonds. So. Unless our financing needs are exploding, I don't see that change a lot.
And Marcus, what are your plans for green issuance going forward?
Yes, Austria will be a constant issuer in the green format. We have 5 billion this year green eligible expenditures. We are now calculating the figure for next year, but it will be at least the same figure. So therefore, we will be regular in the market, on the one hand with new syndicate transactions, with taps of the existing one, but as well with the T-bills, and new for next year as well, the green commercial paper from Austria. So we are able to nearly finance all the instruments we have. And due to the fact that we have a lot of green expenditures, it is possible for us, and it is a clear second pillar in our strategy.
Okay, great. And Kim, what are the plans for the New Zealand Treasury in terms of green bonds?
Before we established the program, we had to make ourselves confident that this would not be a one-off issue. We want this to be an enduring product alongside our nominal bonds and our inflation index bonds. Our initial scan of our universe has got a use of proceeds with a 1 year look back and 3 years, including this year, looking forward. There's initial sort of guidance of around 6.8 billion that we have found in our first sort of view, but that will be added to with each budget, and also some categories are still incomplete. So that was a good starting point for us. But what we will do initially is build up the volume in that one line, that 2034 maturity, before we consider a second bond line. Ultimately, we would like to have probably 2 points on the curve at least. But once again, because of that, the importance of liquidity, would rather focus on that one line initially before thinking about a second bond line. Okay, great.
So we've sort of run out of time now, and so thank you very much to my panel, Kim, Marcus, and Andreas. A very interesting discussion about your debut issuance, which I think will be useful for our next panel, and sovereign issuers that are planning to make their debuts in this market. Thank you very much for joining me, and please do stick around for our next session, where we'll be speaking to incoming debut sovereign issuers. But yeah, thank you very much.
Thank you.
Thank you. Bye-bye.
Thank you. Bye.
Hi everyone. Thank you so much to Marcus, Kim, and Andreas there for their participation in our first session. And I think it's worth saying enormous congratulations to all three of you on launching your debut bonds. I'm Clive Horwood. I'm the Deputy CEO and Managing Editor of OMFIF, and I'm delighted now to have a panel made up of three sovereigns who are planning to issue their first green bond or sustainable bond during the course of 2023, as well as our partners in this GSS bond program at Moody's. And we're delighted to have them on the expertise that they can provide us about the market. There's lots and lots of good advice, I think, there from the issuers on panel one. A lot of issues that I'm sure will come up in the discussion with our future issuers now. Clearly, things like liquidity are a big concern, both in terms of liquidity of the market now, but also making sure that you don't subtract from liquidity of your own program. A lot of the work that we've done so far in this space, as Burhan mentioned earlier, was very much in the emerging market space. Now, it's easy to think about Europe and always to think about the huge issuance that you might have from Next Gen EU or France or Germany or Spain or whatever. But there are obviously also European issuers who are smaller issuers who will have particular concerns and needs as they come to the market. So look, I'm delighted to be joined now by Esther, who's representing Iceland, by Stelios from Cyprus, by Dimitrios from Greece, and also from Tobias Dietmar from Moody's. I'd like to come to each of the issuers first, just quickly to tell our listeners where you're at with your green bond programs at the moment, some of the work that you've been doing, and if you can, just the plan quickly on when this might come to the market. So, Esther, please update us quickly on Iceland's progress towards a debut green bond deal.
Yes, thank you, Clive. Well, the thing is that we published our sustainable financing framework now a little over a year ago, or September 21. We actually had plans to go to the market even last year, but then we had the election almost at the same time when we were publishing the framework, so that delayed the process a bit. And then starting this year, well, there were other issues affecting the market conditions and so on. So we have just been waiting and so sort of, watch and see where things are developing. But because we are not in any hurry and we want to do this, quite well and so that we can be satisfied with the results. So as I say, we are not in any hurry, so we can afford to wait and see. And market conditions, as I say, this year has not been that favorable. So so there is, more or less where we are. And but as there is now like 15 months since we published. We are in the process of updating the framework just to see, where we can, improve some parts of it. So and we will or are aiming to have the update ready early next year, and then in our plans also in the budget for 2023, we are aiming to issue a bond, a labeled bond, and it more likely to go for the green one to begin with. But that is more or less where we are.
So you're ready to go, Esther. This is I suppose the answer there. It's interesting though that you also say that frameworks are living organisms. They are not necessarily set in stone, and even before issuing, you're looking at ways to improve it. I think that's a very interesting point. I suppose also it's very interesting that any time a sovereign does a new type of fundraising, it's an important moment. So getting that first one right, as you say, I guess is of extreme importance, because there are many stakeholders involved in the decision to issue a green bond, including political stakeholders maybe that wouldn't necessarily also be part of just a normal DMO funding program.
No, exactly. That is, and especially I think for Iceland to do a green bond, being sort of a natural green country with all our renewable resources and so on. We would like to do this, like a lead by example in that sense. So.
Okay, thanks for that, Esther. Stelios, over to you now, please. Let us know exactly where Cyprus is on the road to a debut green bond.
Yeah, thank you very much. Currently, we are working both on finalizing our sustainable bond framework. We've decided to go with a sustainable bond framework to have more flexibility due to the small size of the issuance that we have. And we're actually working with other departments to build an asset register of eligible assets. So once we have those two processes complete, we feel that we will be able to go to the market sometime in 2023, as Esther mentioned, depending really on the market conditions and how things develop in the next few months.
Thanks, Stelios. And tell us a little bit more about how you're building that flexibility into the framework, and what that actually means.
Well, for us, what it means is that we are going to have a sustainable framework, not just a green framework, and include a number of social projects and such aspects of government expenditure in order for us to create a bond that is of a size that has relatively good liquidity, as for a small issuer as ourselves, the liquidity of the bonds is significant, especially in this kind of conditions that we're having right now.
Thanks, and I'm sure we'll talk more about liquidity in due course. But just, I mean, if I ask you a slightly unfair question, if 0 was you've only just started the process of thinking about issuing a green bond, and 100 was you're there and ready to go, where on that spectrum are you right now?
Well, it is a bit unfair, but I would say that we're definitely around the 75% area.
Okay, very good to hear. Thank you. Yes. Thank you, Stelios. Dimitris, over to you as well. From Greece's point of view, I know some people were expecting you maybe to come to market this year, so it sounds like you're pretty much ready. But tell us where you're at the moment.
Yeah, thank you, Clive. First of all, I need to stress that we are familiar with this issue since 2017, early 2017. We decided to proceed, or at least trying to examine the possibility to issue a green bond. It was 2 years ago, if I remember correctly. And finally, we appointed the bank. I need to stress it. I can tell you it's the BNP Paribas to have this or take this structuring advisory role. And now we have received the first draft, and we elaborate on this first draft of the green framework. I need to stress also that our difference among other Eurozone peers is that still we are not yet at the investment grade status. That makes a little bit things being a little bit more difficult, but also on the other side, it's a challenge for us because this also provides a unique opportunity. I'm referring to the green bond issuance for a further expansion of the investors base and also for the improvement of the brand name of the Hellenic Republic. So we have until now the first draft of the green bond issuance. Our intention is to issue a dark green bond. The main reason is the improvement, as I mentioned before, to achieve the target of the improvement of the brand name of Greece. I'm not saying that it's an easy target, on the contrary, because, you know, in Greece we have the problem, or let's say it's a luxury for us to have plenty of funds that are coming in the upcoming 6 to 7 years, and I'm referring to the NGU funds and to the EU structural funds. And we have green projects to be funded, but so far, most of them has already planned to be funded by all these EU structural funds and NGU funds. So the potential amount of those projects that are not already funded by other funding sources is a little bit limited. So this is the main target. Indeed, initially we wanted to issue this year, the first green bond issuance to take place this year, I mean 2022. But given the volatile environment, we didn't want to burn, let me put it that way, let's say, to burn this option. We decided to postpone, let's say, this activity for next year, sometime next year. So my last point is that we need, first of all, to have the final draft of the Greek state budget in order to see if there is the room for maneuvers as far as the green projects that are not already funded by other funding sources in order to define, let's say, the spectrum of these projects and the available amount for a green bond issuance. We need to find the balance between the liquidity risk that a green bond issuance without sufficient issued amount will have and our consistency and credibility that should be somehow conveyed as a strong message to the capital markets and to the investors community. The green framework, in order to answer to one of the questions that you raised to my colleagues, is green oriented, although there are provisions, and I'm referring to the first draft, there are provisions at some point in the future, let's say, to be expanded to sustainable or to social, let's say, projects, just for the reason that my colleagues mentioned before, i.e. To be in a position to issue a more liquid, in terms of issued amount, green bond issuance.
Thanks, Dimitris. So just a couple of quick follow-up questions on that. First of all, can you just define for us what you mean by a dark green bond?
I mean, the more green, the better. First of all, we want to follow the taxonomy, the EU taxonomy. We are in a very close cooperation, not only with our structuring advisor, the bank that I mentioned before, but also with other international institutions like EIB. We want to have their opinion regarding our green framework. We are going to be in a very close contact with them, the more green, the better. Now, again, for the reasons that I mentioned before, but we need to have the provision, and we're going to incorporate the provision at a later stage, if and when there is a necessity to expand for the reasons that I mentioned before, mainly for liquidity reasons, the scope of this project to go to more sustainable or more social, let's say, projects to be funded.
And you mentioned some challenges. Obviously, the advent of the EU as a green bond issue has provided a lot of liquidity to the market, but it's also obviously presenting some challenges to an EU DMO as well, in terms of the assets that you might include in a green bond framework. So have you had to sort of slightly go back to the drawing board since 2017 because of that? What explain a little bit more what the impact of NGU has actually been for you, and the positives and the negatives as I just described it.
Thank you for raising this issue, because you give me the opportunity, let's say, to elaborate even further. We used to be a country in the past, a decade ago or even more, that was or wasn't in the position to absorb an amount of 17 to 20 billion, let's say, for a 7 years period, and I'm referring to the EU structural funds that took place at that point of time. Now we have more or less close to 30 billion, 27, 28 billion NGU funds coming in the next 3 to 6 years to be absorbed by the Hellenic Republic, out of which 17 to 18 billion has to do with grants, and 12.8, if I remember correctly, has to do with loans. And on top of this, we need to stress that there will be a leverage factor of 2, i.e., an additional amount of 12.8 billion funds will be provided by banks, credit institutions, and the private sector. So the overall envelope, as far as projects that are going to be financed through the NGU funds plus the leverage, the amounts that I mentioned before, we're talking about of something close to 40 or even more billion. On top of this, we need to stress everything. The contribution of the Greek state will be zero. More or less 40% of this amount will be addressed to green projects. And on top of this, we need to take into account an additional amount of close to 30 billion of EU structural funds, the national contribution of which will be deteriorated close to 10%. All this amount should be absorbed in the next 7 years. So we have, let's say, a problem to be resolved, that it's a good problem. Usually we had the opposite problem: no funds, no projects. Now we have projects, we have plenty of funds, and we are in a very happy position to manage, let's say, the way to fund all these projects. My problem is that we try very hard to fund, as I mentioned initially, projects that are not already funded by other sources. Most probably we need to focus on the national contribution as far as the EU structural funds is concerned. This amount will be deteriorated, more or less 3 billion for the next 3 years, and not all of this amount will be addressed to green projects. So, as I mentioned before, we have a big challenge to find the balance between the liquidity of a new bond issuance and to preserve our credibility, because we are keen to issue a green bond. The more green, as I mentioned before, the better, because of the credibility and because of the brand name of Greece that we want to improve. But because you need to bear in mind that we are not yet at investment grade status. If you allow me to say, it's a selling argument for Greece. On the other side, we need to think very carefully, because we cannot expand our expenditures because we have other limits, and I'm referring to the fiscal targets that are very strict. I need to remind you that given the implication of 3 consecutive fiscal adjustment programs, now we successfully came to the end of even the post-program surveillance period, but still we have an agreement with institutions that Greece should, let's say, be in compliance with the main target, the fiscal target, which is to have, if not from next year, but from 2024 onwards, primary surpluses that should be equal, if not higher, to the actual annual interest payments in order debt not to create debt. So in this context, without having a lot of fiscal flexibility, to spend more for green projects in order to find space for green productivity, we need to find this balance between the achievement of the fiscal targets, the liquidity of the bond issuance, and the credibility of the Hellenic Republic.
Okay, thanks for that, Dimitris. It's a really interesting point. As you've raised it, maybe I can quickly go back to Stelios on a couple of points that you raised. One, that impact of the NGEU program and whether there are any effects on your plans, that and your thoughts on how that is, generating also interest and liquidity in the market. That's part one. And part two, Dimitris mentioned using a bank as an external partner. I just wondered what external partners, Stelios, you're using at the moment.
Yeah, going for the first part, as Dimitris said, it's a good problem to have, and we shouldn't complain since it's very good financing. But the fact is that it's actually reducing our eligible asset pool quite significantly, which is quite the reason why we decided to go with the sustainable route, as a significant part of our green projects in our budget are either partly or fully financed either by the NGEU or the EU structural funds. So we made the conscious decision to go with a sustainable bond in order to reach what we consider a benchmark size for us, which is around 1 billion. So that has created an issue, and it's difficult to increase the capacity of our budget, as a lot of this is also loans. So we cannot increase the public debt more than we can. So and the budget is what it is. So we're finding ourselves to deal with a reduced asset pool. Now, regarding the structuring agents, we have two structuring agents, which are international banks, and we have been working very closely with, and they have provided us with a lot of input on how to develop these issues.
Okay, thank you, Stelios. And Esther, obviously, Iceland not a part of the EU, but very closely integrated in some ways with the EU. I'd say any impact of NGEU, do you see it as a positive liquidity in the overall market that this huge green issue now exists in euros? Part one, and two, just again, going back to your external advisors and how you're using them at the moment.
Yeah, well, if I start with the advisors, we started when we were building the framework. It was actually a work of a working group that we established, which was like from different ministries. And we started building the framework with the external advisors. That was at that time a local advisory firm, a sustainable advisory firm that later merged with the KPMG sustainability arm. And then, of course, we got on an external SPO provider as well, Cicero Shades of Green. And they, of course, in the process made some remarks that were quite helpful. And then, in addition to that, we also received, as I believe Dimitris mentioned as well, some advice and very helpful input from our cooperative banks. But then also we decided to have like a handful of, or some meetings with a handful of advanced ESG investors, just to like better understand the priorities they have, concerns, and with specifically with regards to the impact and the reporting side. And that has helped out quite a bit. And maybe lastly, then we have of course also looked at to our peers and see what they are doing and try to learn from others and their experience. And I actually listened in to the session before, and that was also very, very interesting to hear what both New Zealand, Austria, and Denmark have been doing in this field.
Thank you, Esther. That's very helpful. Obviously, we have a panel of investors coming up after this session, and I'm sure they'll have some very direct. When we've done these sessions before, the advice they give is normally very direct and blunt and to the point, which I'm sure is very, very helpful. I want to come now to our friends at Moody's, who have been a great partner to this program all the way through. And I'm sure we'll spend a bit of time later on talking about second-party opinions and ESG data in a little bit more detail. But Tobias and Dietmar, you're both talking to dozens, I'm sure, of sovereigns on a regular basis. Can you tell us what, from your point of view, are currently the issues that are front of mind, particularly from those who are thinking about coming to the market and haven't actually established their presence just yet? Tobias or Dietmar, one of you go first, and then please the other one follow on.
Dietmar, do you want to start?
Yeah, sure. Thanks, Clive. Thanks, Tobias. Yeah, I mean, we're talking to all of our issuers in the European space, and I just discussed with the team yesterday. So we're really seeing a lot of frameworks being established, a lot of issuances already happened, and the list of countries ranges from top-notch rated countries like Germany and the Netherlands, Denmark. We have France, obviously, Poland, who issued the first green bond in 2017. Then also in Southern Europe with Spain and Italy. Austria is going in that direction. Serbia issued a green bond, which was the first in the Western Balkan region. Turkey is working on a framework, has not issued yet. Israel is set to issue. So basically, all the issuers we're talking with are in the process of working on their frameworks. A lot of have issued already. We're seeing a lot of activity. And I mean, in terms of our Moody's approach to ESG, I mean, we rolled out in 2021 for sovereigns our ESG scores, both the issuer profile scores that really focus on E, S, and G on a range from 1 to 5, 1 being really positive, 5 with very highly negative impact. And then we have these credit impact scores, which detect to what extent the overall rating is influenced by ESG factors. When I look at where we are at the moment in terms of the impact of our ratings, in a global perspective, the environmental considerations on average have a negative impact. The social considerations have a even more significant negative impact, and on the governance side, it's that way that for the advanced economies, and that applies to Iceland, Cyprus, and Greece alike, we see on a global perspective a positive impact from the governance structure there. When we go towards emerging markets and frontier markets, then it flips, and typically it has a negative impact. And a last word on ESG as a credit driver gains importance, and we are very transparent in our press releases and our credit opinions what the drivers are there. And I mean, in the European space, a lot of research on the environmental side. We are moving now in our research program more and more to social issues like health system, like labor markets, unemployment, inequality is a big topic there as well, and then governance will always be with us there. So in terms of rating drivers, governance still dominates. And an example, for instance, is Turkey, where where downgrades were motivated by concerns about the governance there. And when we looked at the UK, at the opposite of the rating spectrum, we also considered a gradual deterioration of institutional strength there as something that has an impact on our rating assessment.
Okay, thank you for that, Dietmar. Tobias, over to you just to get your thoughts on what you see as the key challenges that sovereigns face in this space at the moment.
Yeah, sure. I'll just take a minute or two just to introduce MIS SBO services. As some of you might be aware, we recently moved our SBO service from Moody's ESG Solutions into MIS. This was completed on the 1st of October. It makes a lot of sense for us to sort of complete this transition into MIS because we're essentially working with the same stakeholders. It's the same issuers that are now either already issuing thematic debt or are contemplating issuing thematic debt. And the sort of end recipient and stakeholder of the service that we provide, which is the main second party opinion that the issuers would disclose typically to investors and to the market more broadly, is indeed provided to the same end stakeholder as the credit rating, i.e. the investors. And the SBO is really there to sort of facilitate transparency and provide a third party independent view on the overall strengths and weaknesses of the structure. And the way that we complete this is basically by assessing alignment to its core market principles. I'm sure most of you are familiar with the ICMA's green bond principles, for example, or the sustainability linked bond principles. And we also express our independent view on how we see the contribution to sustainability of the structure that we assess. With the move that we completed to MIS, we also published our assessment framework for how we go about assessing, for the purpose of second-party opinions, the structures that issuers are asking us to assess. And we think that this transparency really is key in this market. Based on the observations that we've made, there is much less transparency on the sort of assessment procedures and the analytical considerations in the SBO space than what we've seen historically in, for example, the credit rating space. So the assessment framework is a key step for us in terms of being transparent to markets and stakeholders about how we conduct our assessment. There are many reasons why we completed this transfer, and just to briefly mention regulation as well. So, of course, the credit rating business is a regulated business. Of course it is. SBOs, as of today, is not a regulated space as such. But as you know, there's a lot of development globally for ESG disclosure regulation. And for example, in the European Union, the European Green Bond Standard is currently under development, and that will include provisions for the solicitation of second-party opinions, as an example. So also by moving our service into MIS, we are sort of preparing for operating in an environment that becomes more and more regulated over time. And we also ensure that we set up our processes similar to how we work and operate for credit ratings, i.e. with compliance oversight, complete separation of analytical and commercial activities, and so forth. In terms of the sovereign space, so Moody's has been operating in the second-party opinion space for a very long time. To date, we have 14 public SBOs on sovereign structures, but we've also provided quite a significant amount, more than the 14, that much I can say, that have been private. And typically the private SBOs have been on loan structures that aren't really in the public domain or not fully. And this is something that we can do. So we can provide both private SBOs that would typically be delivered by the issuer to, for example, a group of banks, or we could provide SBOs that would be published publicly in the market by the issuer and by Moody's at moodys.com. And Clive, you asked me about some of the difficulties that we see in the sovereign space. And these aren't perhaps difficulties, but more observations about some of the differences that we see or experience when we work with sovereign issuers compared to, for example, corporate issuers. I think the first observation that we have is that sovereigns, of course, are incredibly large, incredibly complex, and incredibly diversified entities, much more so than any corporate entity that we work with. And I think that we've heard on this panel and also the previous panel that, for example, something that probably would take more time and be more complex for a sovereign issuer would be locating the sort of use of proceeds through the budget, or actually pinpointing assets that is being held by the sovereign or sovereign entities that can be financed with use of proceeds structures. And I think that the sort of journey to sort of achieve a complete framework and having identified all of these assets seems to take longer for sovereigns, but we are typically contacted at the end of that journey. So when that work is complete, typically an issuer would contact one or several second-party opinion providers and ask them whether they could provide a second-party opinion. Now, normally, on most structures, we'd be able to complete a second-party opinion in about 4 weeks' time. It's very intensive work, but that's the typical time frame that we work on. But for sovereign issuers, this tends to take longer, right? There's also a very interesting World Bank report that came out a few months back that has some stats. I believe that they interviewed quite a few sovereigns about sort of the time frame for completing sort of the steps to thematic issuance, including raising an external review, i.e. a second-party opinion. And that alluded to a much longer time frame, and that's also our sort of experience working on these SPOs. And from our perspective and our experience, this seems to largely be dependent on the fact that there are so many stakeholders within the sovereign that needs to work together to kind of source the information to respond to the type of questions that we would typically have to be able to assess the alignment, and even more complex, so the contribution to sustainability. So I think based on that observation, I think probably sort of one observation could be that, you know, as you're thinking about the time frame to complete this journey, including completing the SPO, it's probably good to factor in that the second party opinion process might take longer due to it taking, you know, longer to actually source the information to respond to the type of questions that a second party opinion provider would likely have.
Thanks, Sebastian. I'll just interrupt you there, so because I can see Dimitri's nodding. So Dimitris, talk us through how you're approaching this, and obviously, you know, assessment is ongoing. We've talked about in the previous panel that things take longer than you might think. You need more expertise than you might have, and clearly, the issuance of a green bond or a sustainable bond of any sort is rather different to a standard bond. There is a commitment for a long term, for at least the lifetime of that bond, to report and assess and provide the market with opinions on that. So how are you approaching that? Get ready for having to do that.
First of all, thank you. First of all, I fully agree. Yes, it will take time. We have already established an interministerial committee, let's say, in order to be in a position, first of all, to define the projects, the assets that should be financed, and thereafter to have them, let's say, ask the committee that should follow and provide the necessary information the day after the issuance of a green bond or a sustainable or whatever bond is going to be issued. On the other side, that's why I don't want to create expectations, because they are, as far as the issues, the time of the first issuance, because thereafter I need to manage these expectations, especially to investors community. We haven't appointed yet, because as I mentioned before, we have received and we are examining the first draft of the green framework. This is something that will take place most probably early next year, January, by the end of January. And in any case, I fully agree that this will take time. And the most difficult part of this job is the day after the issuance. How credible we will be, because if you remember me, I was trying to tell you that I told you that we need to find a balance between the lack of liquidity, the credibility, and let's say the fiscal targets that has been set so far. So indeed, this is a very challenging, let's say, issue that should be faced and should be resolved in the near future. So yes, it will take time, perhaps 3, 4, 6 months, it doesn't matter. But in any case, you know, given the deteriorated funding activity for next year, because we don't have so much gross financing needs, most probably we will have this time in order to achieve the target that I mentioned before, to have the first bond issuance. My main problem is, as I always say, the last 2 years, if I remember correctly, is to fund projects that are not already financed by other funding sources.
Okay, thanks, Dimitris. Just going back to that issue as Tobias presented it of the the need for that assessment and the transparency and the infrastructure you need going forward to provide that. Esther, can you talk us a little bit about how you're viewing that at the moment at Iceland and what you already have in place and what more you think you need to build?
Yes, thank you. Well, we have this interministerial committee that will screen those projects that we have, found eligible with regards to our three main categories, which are other green, green projects, blue projects, or social projects. Those that we identified in the first place. So this committee will then, choose those projects that are, or we would fund with a special green bond, because at least that is our aim to do like a use of proceeds bond. So the committee will screen those and sort of choose the right pool of assets. And for us, it is actually very important to have this pool of assets and those projects that we have identified already are larger one than for the potential benchmark size, which we see as 500 million euros. So because if you don't have these some flexibility with regards to the pool of assets you have, if something happens and some project is deemed to be not as green as you thought it would be, or will not take place or something, then you have to be able to substitute or switch projects within this pool. So and with regards to the reporting, we are actually in the process of finalizing that. We would like to have the reporting structure as much as automatic as we can. The Ministry of Environment, we have this, we can call it like a climate bookkeeping in place in Iceland. So we have a lot of resources which we have to, in various places. So which we have to, combine and take into this reporting structure, so we can, do the proper impact reporting as well as we would like to be. So we just
yeah. Sorry, Esther.
Yeah. No, we as I say, we're just in the process of finalizing that structure.
And just on the issue of sort of like building the asset pools and what Tobias was saying earlier about it takes time to get the second party opinion. Is there an element here and a difficulty in that you work very hard internally to locate those assets, and then you have to go outside to verify the work you've done? It's almost like you have to sort of mark your own homework first, and then you bring in the examiner to actually give you the score. Is there more that could be done in terms of working more closely or bringing in those outsiders to advise earlier on? Is that something that you've looked at?
Well, in our case, we actually did work, as I mentioned before, quite early on with this local advisor, which later merged with KPMG. So, and they of course assist us quite a lot. And then in the process, of course, there are, when you are getting your SPO, you get feedback, so which are really helpful as well. But if there is something that we could actually learn from our process, is I think also mentioned by Kim from New Zealand in the first session, is that we kind of underestimated to begin with the important role of other ministries. So, because this is a project that was led by the Ministry of Finance and Economic Affairs, but to involve all the right stakeholders at a at an early stage is quite important, and that is something that we could learn from, and we have been improving. And as I say, this committee is now in place and has been appointed and so on. So we are good to go.
Okay, thanks, Esther. Stelios, come to you now, just on that issue of the commitment that you're making to ongoing assessment and second party opinions and the work that you have to do there. And I suppose it's worth just asking, obviously green bonds, sustainable bonds are an important thing in many respects, but also it's for an issuer that's not that frequent, it's a big commitment. Are you sure it's worth it?
Well, yeah, we are sure it's worth it, because we wouldn't be doing it if we weren't. But you are right, it's a significant administrative burden for an issuer, and definitely a lot more than a vanilla bond. However, it does have a lot of advantages for an issuer, in that there is a lot of demand for ESG bonds now, and for the last couple of years, every time we would go into the market, one of the questions by investors was, are you going to do a green bond sometime in the future? So there is definitely a demand, and definitely a positive positive externalities for this issue. Also, one could look at it that, yeah, it is an administrative burden, but it does create a culture of accountability that goes broader than the Ministry of Finance, as the departments themselves now have to start reporting and evaluating their operations. So one could argue that you are also getting further positive things by creating this kind of reporting every year, and it allows you to actually evaluate your own work and your own expenditures. So yeah, it is a significant burden, but we do think that it's worth it, and it's something that we will continue to work towards. And
so we heard from the issuers earlier that one of the positives of doing their debut bond was locating and broadening investor base, both geographically and by type of investor. Is that a motivating factor for you?
I think it's perhaps the biggest motivating factor on our side. Again, a small issuer, we're having liquidity is always an issue, no matter what. So actually broadening the investor pool as much as possible is one of our main objectives in our debt management strategy. So we consider this as part of that strategy, to reach out to as many investors as possible and to provide them with a product that they would like to buy.
And would you expect to do any kind of formal roadshow ahead of your debut green bond?
Our view is that, considering it's a debut bond, we will have to do extensive marketing towards it to again put ourselves forward and make known to the market, since these are a lot of could be investors that we've never talked in the past. So yeah, we do believe that we're going to take on significant marketing activities.
Okay. Same question to you, Dimitris.
Yes. As soon as we're going to introduce, let's say, to have the final draft of the green framework, and that should be, let's say, approved by the board of directors in PDMA, we're going to start doing all this marketing, as Stelios mentioned before, in order to convey the strong message to the capital markets and the investors community. To your previous question, yes, indeed. Bear in mind what I mentioned before. Two reasons, perhaps three targets to be achieved through a green bond issuance. The one is the improvement of the brand name of Greece, especially of a country that is not yet at the investment grade status. The second was the expansion of the investors base. This incorporates also the geographical expansion, if you allow me to say, not only addressed to Europe, but also perhaps to US investors, and perhaps why not to Asia investors, although we do know that their preference is to invest in investment grade status securities. Most probably again, but it remains to be seen, this non-deal kind of a non-deal or so will take place after the first quarter of next year, perhaps second quarter or perhaps third quarter of next year.
Okay, thanks, Dimitris. Tobias, we've talked a lot about issuers and their use of second-party opinions, but what about investors? How is the investor community sort of developing its ability to analyze and understand what is remains a fairly diverse field as well?
Yes, indeed. I think actually that's a nice segue from the prior discussion on kind of the value proposition of thematic issuance. So greenium, for example, has been mentioned as a kind of driving force for issuing thematic debt, also widening your investor base. And I think that there are certainly quite a few studies at this point in time that kind of evidence the existence of the greenium and the ability of thematic issuance to secure new investors. But I think that those are also sort of gains that occur as you enter the thematic space, if you like. If those two sort of the value proposition for issuers, if they weren't there, would issuers stop issuing thematic debts? And I think perhaps there's sort of an additional component here, which speaks to the question that you just raised, that needs to come into focus as well, which I think is a more sort of fundamental long-term driver for the growth of the thematic debt space. And I think for issuers, it's the ability to use the thematic instrument as a communication tool with your debt investors. And if you think about it, that's something that the market, in its continuous strive for efficiency with standardized issuance prospectuses, credit ratings, and general corporate purpose structures, is not really catering to. So there's kind of this fundamental need amongst investors that thematic issuance facilitates. And since investors are very focused on ESG today, it's a good opportunity for issuers to kind of promote, highlight, and engage with debt investors directly and specifically through the issuance of thematic instruments. And I think that's a much more fundamental driver. It's a long-term driver because it addresses a long-term need. And from the investor's perspective, and sort of based on the question that you asked in terms of what the value proposition for them is, well, I think firstly, in thematic finance, the gain that investors have is for use of proceeds instrument. Well, it's certainly the ability to know what the money is being used for, because if you look at how ESG investment evolved in the equity space, because that's where ESG investing kind of grew up and matured. That was based on owning a share of an entity, right? I mean, you could exercise a certain degree of control proportional to your ownership in that entity. And of course, regardless of the share that you owned, you had kind of to look at the entirety of their business, right? Because you owned a slice of all their activities, and sort of reporting structures grew from that. But debt investment is very different. It's fundamentally different. If you know what you're financing, that's primarily what you're exposed to. If you have someone that's building a wind farm, but you perhaps don't like the rest of their business, financing that specific wind farm is probably something that a lot of investors could accept. It's a part of a transition. They want to support it. But financing a general corporate purpose bond might not be something that they're interested in that case. So that also kind of speaks to that fundamental value proposition to investors. But also, investors also have stakeholders, of course, and the ability to disclose what they're allocating funds to rather than just who they're lending money to is a really powerful transition that has occurred through the growth of thematic financing. So it really kind of empowers investors as well. And how the second party opinion comes into this, I think that's really as an independent, credible, third party assessment on, firstly, the sort of alignment to principles. And that's going to depend on the investors, of course, and the type of investment mandate that they have. But I think it's certainly fair to say today that given how sort of important the ICMA standards have become globally, the expectancy is very likely to be among many investors that structures should align to those principles. So that's the first thing that
sorry, I'm going to just interrupt because I can see the clock ticking really, really, really fast. And there's just a couple of things that I just want to pick up on that you mentioned there and just put them to our issuers. On the subject of greeniums, I mean, often people ask a question of an issuer, do you expect to get a greenium? I'd like to ask it slightly more differently, given the discussion that we've had today about the multiple stakeholders. Do your other stakeholders internally expect you to get a greenium? So, Dimitris, maybe you could start on that.
No, is this a sufficient answer? But in any case, if there is any basis point or a couple of basis points as greenium, this most probably will be counterbalanced by the lack of liquidity, i.e. the liquidity premium that should be left as an additional basis points on the left, should be left on the table in order to attract investors. So, perhaps the greenium exists for those investors, supranationals, or let's say what we call big investors like Germany, like France, etc., that could provide, that can issue in a blink of an eye 5 billion green bond issuance, twin bonds or whatever, let's say, and they can be in a position to reassure that the greenium exists and they are going to take the benefit of this greenium. In case of Greece, I doubt, and in any case, if there is any basis point or 2-3 basis points reduction due to the greenium, unfortunately for us, it will be counterbalanced by the lack of liquidity and therefore by the additional liquidity premium that we need to pay in order investors being compensated accordingly.
Okay, thanks, Dimitris. Esther, same for you. Are you expected to achieve a greenium, a low cost of funds in this? Is it an issue? Is it something discussed internally?
Well, of course, we have discussed it, and I think, if so, of course, it would be appreciated. However, I think a greenium cannot really be expected, especially not for small issuers like Iceland and the very irregular ones as well. It can be, for those that, and especially those that have been doing these twin bond contracts, like Germany and Denmark, where you can actually see the greenium effect right away. But the greenium, even though we would get a greenium, that, doing a green bond actually involves a lot of extra cost as well. So that, has a counter effect. But, and the reason for us to consider one is definitely not the greenium. It's just, and the main reason, of course, is to support the goals and the objectives that the government has, and encourage the transition that is needed to achieve those goals and objectives. And one maybe because, of course, it has been mentioned that broaden the investor base is very important and, for us as well. And we see an opportunity in that by issuing sustainable bonds. But one thing I also want to mention, because this is a very comprehensive process going through, and very, it's a huge exercise, and it actually involves or entails also a valuable learning process, and to build up this knowledge within the ministries and the government and raise the awareness of these issues are quite important. So, all in all, I think, it's an exercise we really appreciate, even though we will never, ever do anything in this field or not.
Okay, thanks, Esther. Stelios, just quickly on the greenium question. Good point that Esther made about you might fund slightly a basis point lower, but obviously the commitment and the resource, if you factored an all-in cost, probably means that the greenium is wiped out anyway.
Yeah, I will agree with my colleagues and say that even if we do get a greenium, it will be small enough that it will be wiped out by the other costs, and including the administrative burden, which I think should never be underestimated. But all the other positive externalities are what the reason why we are pushing towards issuing this kind of bond. I think the greenium is, if not the last, one of the least important factors that come into play.
Thank you. We are starting to run out of time. I just wanted to, all of you have, I think, set up the possibility of issuing a range of GSS type securities, whether it might be green bonds, dark green bonds, maybe sustainability linked down the line. And obviously we've seen some very interesting developments in terms of step up, step down coupons based on KPIs, all of that kind of thing at the moment. But you are also all relatively small issuers. So is there a trade-off between having the optionality, but at the same time, if you're in the market not that frequently and you're competing in some respects against some very large issuers who are in this space, that it would be better to pick one type of GSS issuance rather than sort of like leave yourself open to a range of them? Stelios, perhaps you could start on that.
Yeah, I think because the optionality actually has no cost, it's good to have, because you never know how things will develop in the future. However, you are correct that there's just so much we can do with this, with the size of issuance that we plan in the medium to long term. So perhaps it's understandable that we will have limited choices in what we issue, but I do think that having the optionality is a good idea, because there's always opportunities to take advantage of, and the market might change. So it's good to have that optionality.
And Stelios, in a normal year, how many green or social or sustainable bonds might Cyprus issue in the future?
Well, we can't do this every year. There's just not enough projects, and so we are looking at doing one issuance every 1 or 2 years, and every 2 or 3 years, and that is why we're also going for the sustainable route, in order to be able to actually bring in as many projects as we can.
Okay, thank you. Esther, can you talk quickly as well about that optionality, and again, being a relatively small issuer, the trade-off between that optionality and building not a curve as such, but at least a track record in a particular type of GSS asset?
Yeah, well, this will definitely be a challenge going forward, because and one of the reasons actually that we are maybe pushing for this now is that we are in the position that we have to take on additional debt, after the COVID pandemic hit us, because we have been on a downward trajectory for quite a few years, and then the pandemic hit, and so we had to turn around again and take on quite an additional debt. So we were actually, we also saw this as an opportunity to do something in this field without compromising the debt management objectives, because and those objectives are of course mainly concerning to provide liquidity, to have a deep and active market, and regulations and so on. So it is actually we are not foreseeing us to be able to build a curve within these GSS space going forward. However, as the how do you say, the pressure is always increasing on governments to make more commitments towards sustainability going forward, and also to involve the capital markets and their role in this respect. I could see actually more governments going to have more of their issuance in this field, or in the sustainable field, in the future than we are now. But this will also, as I say, those general debt management objectives has to be preserved and also taken into account. So it will be a balance, and it will be a challenge for smaller issues, definitely.
Okay, thank you, Esa. And Dimitris, to you, please.
Due to the fact that we are running out of time, let me put it bluntly. Most probably we are going to have every 2 years, let's say, a green bond activity, let me put it that way. Flexibility, it's good to have it. That's why we have a provision in the draft of this framework, let's say, to extend the scope of and the assets in the future. And there is no possibility to build a green bond yield curve due to the fact that we are not just a small issuer, but also our annual gross financing needs are very deteriorated because of the favorable structure of the Greek public debt portfolio, because of the structural reforms that have been achieved so far, and the primary surpluses that are coming, etc., etc. So more or less, this will be the case for the next years. And as far as the maturity of the green bond issuance, most probably will be what we call an odd one, not a 30-year, not a 20-year, you know, something, let's say, most probably longer than 10, but not that what we call odd maturity, 17, 12, 13, etc. Or having a complementary role than a key role in our yield curve.
Thanks, Demetrius. Well, it would be interesting to hear from our investor panel coming up in a moment how they view having a building out of the different types of sovereign credits within the GSS space is important, and you know, where infrequent issues in the GSS space might fit into their portfolios. But for now, I want to thank all the panelists. I want to wish Esther and Stelios and Demetrius all the best for 2023. We very much hope to see your bonds coming and talking to you about it as well. Tobias and Dima, thank you for the insight you provided. The second party opinion provider is so important to this. The ability for investors to have some sort of benchmark at which they can invest and to understand what the different taxonomies and assets within various issuers' portfolios will be. So thank you all very much indeed. So we'll move now to the people who at the end have to be the ones that are persuaded and actually make this market work, the investors. And I'll hand over to my colleague Emma McGarty, who is the Managing Director of our Sustainable Policy Institute at OMFIF. Emma, over to you.
Hello, thank you very much, Clive. Yeah, so we're going to move on to the final panel of the morning, which is, as Clive just said, looking at investors' outlook and basically hearing their perspective on all of this. So I'm joined today by Felipe Gordillo, who's Senior ESG Analysis at Morova, Isabel Edwards, who's Green Bond Analysis at an Investment Partners, Joseph Orevella, who is Sovereign ESG Analyst at Aviva Investors, and Victor Zazabo, who is Investment Director at Aberdeen. So welcome all. Thank you so much for joining. I think just to kick off the discussion, it would be great just to hear what investors' current thoughts are on the green and social sustainable sovereign bond market. We've been hearing in the last panel that there is a lot of demand. What is the current state of the market? Is demand still outweighing supply? And what is your perspective on that? So Felipe, can I go to you first?
Hi, everyone. Yes, of course. So very happy to be here and to contribute to the conversation. The question is, what about what are the trends in the current market?
Yeah, the trends and your current thoughts on the market and what the kind of outlook is. Right. That's a great question. I think that, you know, there are two ways to look at the green sovereign market or GSS sovereign market. You have the advanced economies in one side, and mostly of those advanced economies are basically European countries. And then you have the emerging world. And there are two different types of issuers, two different types of trends that you can see there. But very quickly, what we can see here in the advanced economies group is that we have seen a lot of transactions. So you can argue that today the majority of the Eurozone countries have printed a GSS bond, which is very good news. However, when you look at the use of proceeds of those transactions, there is kind of a big trend in European green bond issuers. The majority of those use of proceeds are actually allocated into railways. And our research found that 60% of those use of proceeds are actually allocated to railways, and we are not against railways. But when you look at the source of greenhouse gases in some economies, advanced economies, you can argue that the majority of the greenhouse gases are not actually
coming from that sector, from the transport sector. You have more challenging sectors in advanced economies, like, for example, industry, real estate, agriculture. So when you have a sovereign, the power of sovereign issuers that have built so many infrastructures over the last years, you can argue that as an investor, what you would like to see is more transactions, more use of proceeds allocated into those areas where it's really challenging to decarbonize. So that's the big trend that I see for advanced economies. Then moving now into emerging economies, I think the story there is more about, I would say, SDG bonds. So a combination of green use of proceeds and social use of proceeds. So that's very positive. We really encourage emerging countries to continue into that phase, into that trend. But when you look at the use of proceeds that those emerging countries are printing, you realize that the majority are simply linked to their business as usual budget needs. So, you have education, you have health, you have water and sanitation, but those areas are the normal expenditures that they are doing anyhow. So you can argue that one of the challenges for emerging countries is that you don't see kind of an additionality or additional efforts from those countries to use the concept, the sustainability bond or the SDG bond concept, to actually increase their resources to those areas that are most needed. So I think that summarize, and I don't know, maybe my colleagues in the panel will challenge that vision, but that's what we see in our research at the moment in Europe.
Fantastic, thank you, Felipe. And I think we'll definitely come back to the question of emerging market and the development of ESG bond funds there as well. Isabel, can I go to you for this question as well? Trends that you're currently seeing, and also going back to the previous panel, there was this mention of demand and demand outweighing supply. Is that something that you're seeing, and what are the current trends that you're seeing in the bond market as well? What's your outlook?
Yeah, sure. I'll agree mostly with Felipe. Of course, we always want more supply to choose from in the sovereign bond market and more diversification. But it looks like already that's going to be happening over the next year. We've seen some prominent emerging market sovereign issuers making announcements that they're going to come to the market next year. I'm sure everyone's seen India's announcements that they've been putting out. I think even this morning they said it was going to be January, March time. And then some other sovereigns in regions that we don't often see on the green bond market, such as Australia. Like, it seems like 2023 is going to have a lot of sovereign issuance, and not necessarily in the countries that we usually see coming out with green bonds. So I think that it's going to be very interesting to see which criteria and which taxonomies and which guidance they're going to take, and as Felipe said, the green social sustainability mix that they choose. And I think it's going to be a good year for sovereign issuance. On the demand versus supply and the greenium and all of that, we tend to only really get an issue with this when it's either a region that we rarely see or an industry that we rarely see, and they come to the market and it's something a bit unusual for the green bond market, and everybody's rushing to this new issuer to get some diversification for their portfolios. And so it is a bit of an issue then for us. But in general, I mean, we welcome still, repeat issuers. We're very happy to, invest in repeat issuers as well. So for us, we're not too worried about, the market and the state of it at the moment. But of course, we're always willing to work with sectors that are lesser seen in the market. Metals and mining, for instance, we had a lot of conversations over the last year from metals and mining industry players. Seems like quite a few metals and mining companies are looking maybe 2023 for an issuance, and we do need sort of more unusual sectors to diversify the market.
Brilliant, thank you, Isabel. Yeah, I think we can definitely come into the taxonomy disclosure and kind of regulatory conversation in a minute, and I think it would be good to go a little bit deeper into this diversification issue, which I think Felipe and yourself both just touched upon. But Joseph, maybe I can bring you in here for quick introductions and to answer this question of kind of outlook that you're seeing, demand versus supply, and current trends that you're seeing in the bond market.
Morning, Emma. Yeah, thanks for having me on this panel. I think I'd mostly agree with what my colleagues have said. I think obviously there have been challenges which everyone knows about regarding issuance this year. But from what we've seen from some of the conversations we've been having with some of the sovereign issuers over the recent months, it does seem as though things are going to pick up slightly over the coming year, which is, a positive development. And I think just to touch also on a point which Felipe raised around additionality, I think that's obviously something which is very important to us. When it's important not just to look at these issuances at the security level, but at the issuer level, and to see how the issuance fits in with a broader sustainability strategy, and the way that we look at that is perhaps areas where of particular improvement of a particular issuer. And so yeah, it's very important to us that issuers do target the use of proceeds of these issuances at areas which are perhaps most pertinent for improvement.
Wonderful, thank you, Joseph. And Victor, last but not least, what is your current perspective on the bond market trends, outlooks, and this demand versus supply issue as well?
Yeah, so thank you for having me and for the question. Just as a background, I am focusing on emerging markets. We invest in emerging market bonds, so I'm looking at the world from that perspective. And actually, I like the positivity which Isabel had, but my feeling looking at the trend in emerging markets is more glass half empty rather than half full this year. Clearly, I think demands would be there, insatiable. For me, the whole kind of label bond universe should be a breaking out point for emerging markets to bridge some of the huge financing gap we have. There was an OECD estimate that annually around $4 trillion is the size of the funding gap between what countries, actually emerging markets, developing countries have versus what they would need to invest in order to meet the UN's SDG targets by 2030, and that's huge. And I think label bonds could really play a role here because they could bridge that credibility gap which some investors have when they talk about investing in emerging markets. But what we have seen this year has not really confirmed especially kind of on the supply side, what we have seen in emerging markets. We had basically 5 countries issuing on these markets. All of them are kind of matured GSS issuers, or say label bond issuers in general. Once again, we had Chile dominating with almost half of all the issuance. All of these countries are kind of at the very developed stage of EM. I would say they're all highly rated, all kind of investment grade issuers, mostly issuing in hard currency when it comes to label bonds. And if you look at the totality of the issuance, what has happened is less than half of last year. So unfortunately, I'm not seeing the increase on the supply side. Yes, there were some announcements, which is positive. I think we need much more, and we would be really happy to have more. And coming back to is a good point raised by Joseph, is that yes, you have to look at the overall issuer level, because some of those issuers might not meet overall other ESG criteria. So it is a good question whether you accept kind of a normal use of proceeds bond issuer for someone who otherwise is not really an issuer you want to invest with. But that's for every investor to decide for themselves.
Sure. And one question I have is how do we kind of bridge that gap and how do we kind of support those labour bonds which are maybe less mature? That's a question that I have, and I see Felipe has already got his hand up. So Felipe, would you want to chime in there?
Sorry, I just wanted to react to what Victor said about the lack of transactions in the market, and I wanted to say that I agree with that. The previous panel, I recall some representatives from government saying that they will consider to print a green or a GSS bond between every 2 years, every 3 years. And these are very interesting information, because what we see there is that governments are not able to identify enough green or social expenditures. Let's talk about only green bonds. So that means that governments are lacking ambition when it comes to identifying those assets, those projects that they could eventually support through their own balance sheet. And that's very worrying, because as you see, as the market, how it's evolving, we have seen incredible figures in the green bond market. Those are good news, but we still have a problem. We still have a lot of carbon emissions going into the atmosphere. And one of the biggest actors, one of the most powerful actors that are able to change and to take long-term decisions, to take short-term risks into their balance sheet, are governments. So I think that's a very interesting piece of information, to see that there is something that is not really working. And I wouldn't say that I see green bonds as the last step of this value chain. You know, when you come to the market, this is the final step. But in reality, you know, the problem is what happens with those governments who are not able to outsource enough projects. And that, in my point of view, means that we have a problem in terms of lack of a political will to move forward and to do it in a bold basis.
Victor, do you have a response to that, and maybe also to my question on kind of how we can bridge that divide and kind of build up the kind of less mature labour bond market as well?
Yeah, that is absolutely fair comment, which we've had. Although those countries which issued this year in the emerging market space, they have also, most of them issued last year as well, in the same space. So they have mature programs, frameworks, well-established frameworks under which they can. But yes, lack of projects is one problem. But I think here one of the solution and what we have seen this year as a major development in this market is that not necessarily stick to the kind of use of proceeds bonds, but have longer term commitments through the sustainability linked bonds, which arguably is a bit more difficult, and it requires a strong commitment, because we know that the typical maturity of these bonds overreaching political cycles. So you have to be sure that once you have election, that the next incoming government will stick to the same objectives and will deliver the same. But you can set KPIs which are in line with sustainability goals, with the line of the Paris targets. It's unsurprising that one of the KPIs for both sustainability-linked bonds, which were issued this year for Chile and Uruguay, is about greenhouse gas emissions, which is obviously one of the key objectives. And then you can add other ones. You can add renewables, like happened in Chile, but you can have nature targets, or you can have social targets. And then these are objectives towards which you can move, and you will have the external third-party assessment of how serious those commitments are, how strong, and we have seen in the case of these two issuers that they were deemed as quite ambitious. And that can be a way forward. If you don't have enough projects, you can still have commitments, important commitments, and you can raise capital for that.
Yeah, absolutely. Isabel, I saw you do a clap and your hand is up, so let's bring you in here.
It both look the same, the clap and the raise hand, but also clapping. I'm clapping for you as well, Victor. Yeah, I just wanted to add on the sort of trying to bridge the gap in supply. This was something that came up quite a bit at the COP27. So there was a lot of talk about making sure that emerging markets receive the right amount of financing that they need to combat climate change at COP27, and the funding gap that exists between the richer countries and the countries that need it the most to adapt to climate change. And as part of that conversation, there was also talk of, perhaps private investors in the EU could also think about, putting minimum percentages or making sure that more of their ESG funds are flowing towards emerging markets. And there was a lot of private investor discussions alongside sort of, just the government funds also flowing towards emerging markets. And we definitely took that away. And, we've already sort of started to think about an emerging market engagement program where we can talk to more emerging market issuers and do like feedback on their frameworks and what it would take to get them to market. And we've certainly taken that on board.
Good. What does that program involve? How are you engaging? What's the reaction been? And how is that kind of supporting that growth?
Yeah, so I mean, we already do it with sort of any issuer that wants to discuss these types of things, but to reach out and ask about how they would want to structure their frameworks, what kind of use of proceeds they would include in there, where their data gaps are, and what sort of alternatives we would accept for sort of certain data points that don't exist there, sort of how to do impact reporting when data is a bit of an issue, and just sort of providing sort of back and forth feedback and advice on how to structure the frameworks and impact reporting so that there's a sort of a good reception if they would come to EU investors.
Good. I think maybe the data gap issue is actually something we could potentially come back to. But I'd like to maybe just touch upon regulation briefly, because this is something that was also brought up in the last panel, the kind of rise in disclosure and perhaps the impact that that's having. So what are you guys seeing in terms of kind of the growing disclosure requirements and standards, the impact that that's having on you and what that means for investment? And what kind of guidance is that out for sovereigns as well? Victor, I'm gonna call on you first.
Yeah, obviously we are complying with the reporting requirements, which is quite a burden, but probably a nice one to have in the long run. But when it comes to sovereigns, it's quite difficult because the regulator, especially in the EU, is not at all straightforward what it means when it comes to sustainability for sovereigns. There is no clear definition. There is, coming back to this kind of funding gap, clearly there is a lot of money which needs to go towards developing markets. And if you look at kind of any country, any budget, big part of that budget is actually spent on goals which would be aligned with sustainability or SDG goals, because a lot of that goes to healthcare, education, social support. So it's a bit of a, as it was mentioned, business as usual. But it is. So financing emerging markets, arguably you could say, is sustainable, but there is no way you can attach kind of percentages. You cannot really dig into the budget. You can approach from the kind of do no harm perspective and starting to exclude countries based on their kind of budgetary spending. For example, if a country spends a lot on defense, some might argue that that's something which should exclude the country, but then I'm thinking about Ukraine, which is now unfortunately forced to spend 20% of its budget on defense. Whether it's enough to prevent funding for reconstruction for this country. So it's quite a difficult one, and I'm not surprised that there is no unified kind of regulatory approach. But at some point, we will have to find out kind of how we identify. So those portfolios which are sovereign investments or have an allocation to sovereign bonds, whether they deem sustainable or not. And also, just coming back to my previous point, the easy kind of box sticking exercise could be is just classify everything which is labeled bond as a sustainable. But once again, what happens with those sustainable issuers who otherwise have different negative ESG performances, whether they treat them. So I would say that the jury is still out there. It's quite difficult. Arguably, you could say that any investment in developed market sovereigns is sustainable, but clearly that's not the way the regulator will take, I think.
Sure. Joseph, maybe I can bring you in here for this question on kind of developing regulation and disclosure, how you at Aviva investors are dealing with that and what impact that's having on you.
Yeah, sure. Yeah, I think as Victor mentioned, we're still waiting to see how the EU and the regulators are developing some of the frameworks which are coming out. I think, for instance, the green taxonomy is still being finalized. I think we're expecting that next year, and I think the ways that we can try to kind of mitigate some of the uncertainty around that is just to use some of the existing standards and so I think we look at ICMA principles. We try to we require alignment with those principles, but also double checking that against the climate bonds initiatives taxonomies as well. So I think those two aspects, and then the broader alignment which we're seeing in the broader convergence between different regulators and standard setters, I think gives us some confidence that over time these issues will start to smooth out.
Very good. Isabel, is there anything you'd like to add to this, and maybe the risks involved in this rising regulation and disclosure, and how you're handling that? Victor mentioned the labelling of funds. So how is that impacting your decision making? There's also the issue of greenwashing.
Yeah, well, I can give the perspective of we are an Article 9 strategy, so that's where we're coming from. So we do have to provide our EU taxonomy alignment with sovereigns included and without sovereigns included. This is helpful since sovereigns don't really do that well when assessing against the EU taxonomy for their green bonds, just due to the nature of how they traditionally structured their frameworks. For instance, allocating use of proceeds to certain government budget lines or programs or ministry offices doesn't necessarily give you an overview on what types of individual activities are being financed in the green bond, which means you cannot assess the alignment to the EU taxonomy. So in general, sovereigns were not really doing too well in our portfolio when assessing the EU taxonomy alignment. So being able to not include sovereigns in that scoring was quite helpful to us as well. The risks for these labeled funds is that every sovereign bond that we add to our Article 9 fund, more often than not, I mean, some sovereigns are now changing the way they allocate use of proceeds, but more often than not, it takes us closer to our minimum EU taxonomy alignment for the fund each time we add a new sovereign bond. So there is a worry that eventually, if we keep adding these non-taxonomy aligned bonds, that we're going to, get close to the limit, and then we'll have to miss out on certain sovereign issuances in the future due to it taking us too close to our limit. This also is quite relevant for emerging market issuers as well. Emerging market issuers rarely meet the EU taxonomy, so that's especially true for the emerging market sovereigns that we would also try to add to our fund. So there is a bit of a risk, but I think it still needs to develop, as my colleagues have also said. There is some time to see how this regulation plays out.
Maybe I could. Maybe I'd like to add on that point of sovereigns in the context of European regulation. Totally agree with Isabel on that point on how difficult it's to actually assess their alignment. And I think that what we have seen from the last draft version of the European Green Bond Standard, it makes more difficult to have kind of a clear point of view on how to treat sovereigns, because EUGBS, European Green Bond Standard, is actually proposing an exemption for sovereigns to demonstrate project level alignment with the taxonomy. So they only need to prove that their overall program is aligned, but not the individual assets or projects. And that seems unfair for corporates that if they want to use the EU GBS, they need to prove individual project alignment with the taxonomy. So I think that's a point of that we need to look at this very closely. And in addition to what Victor said, I would like to say that there is also the question around the competition between taxonomies. Because, okay, the European Union has printed a green taxonomy. We know the positive side, the negative side. But at the same time, different jurisdictions are also working on their own taxonomies within their own terms. So as an investor, at some point, that will be very difficult to say, okay, I'm going to lend money to this government, but wait, this taxonomy is not that aligned with the European taxonomy, which, by the way, is the one that I need to comply as an European investor. I think the question of competition between taxonomies and ideally, that's what we want to see, some kind of coherence between those taxonomies will make our life as investors much more easier.
So you're in favor of interoperability in taxonomy regulation?
Yeah, I was going to agree with Felipe that if someone could officially approve an equivalency exercise between certain categories within all of the different taxonomies, this would be incredibly useful.
Yeah, and would that be useful in emerging markets as well, considering that obviously they're going to be at a different level, I guess, than kind of the developed markets in terms of where the sustainable finance infrastructure is, the kind of bonds and frameworks that they have. Should there still be that interoperability, or should there be space for innovation as well in terms of how they develop their taxonomies, and also thinking about how that can help develop their sustainable finance infrastructure too?
And it's not just for us investors important. I mean, for the issuers, that is a major headache if they want obviously to reach the broadest possible investor universe while they are confronting different regulatory environments, and difficult for them to kind of satisfy everyone, especially given that the regulation is changing while these typical when you label bond programs, they are there for long term. So I really feel for a lot of the sovereign issuers who have to design their programs while there is huge uncertainty on the regulatory side. So how they will meet that, it's a great challenge.
Yeah. Excuse me. What sort of structures and formats do you think investors, or are you as investors particularly kind of interested in when you're looking at these bonds and these developments? Victor, maybe I can go to you first.
Yeah, I mean, we're open to any structures. I think it's quite important to align the interest of the issuer and the interest of investors. I had some concerns before Uruguay came to the market, how the step-down coupon would be treated, because it's quite obvious that, I mean, I think the step-up was easily understood, even in a sovereign context, although there was only one precedent, Chile, but that was easy to understand. The step-down, there was a fear that immediately all investors will have to price to worse. So basically, take the lower possible coupon outcome. But I think the market perceived the bond quite well and understood that, yes, if there is alignment of interest, then they should be kind of both sticks and carrots on both sides. And given the uniqueness of this issuance, there was no problem placing that bond. Obviously, it helps that it comes from a very reputable issuer with a very strong SLB framework. But I think that we should be open to these structures, not necessarily limiting to kind of environmental. Not necessarily limiting to greenhouse focused. There's a lot of possibility of other nature conservation projects. We have seen some blue bonds, but they're all kind of private placements, small size. Once again, running into the problem which Felipe mentioned, that you have just small issuers not being able to have that amount of projects and co-financing to make it really worthwhile to come with a sizable bond to the market. But still, there are many issuers who I think would be able to issue either GSS bonds or sustainability-linked bonds, and there the scope is completely open. There are many different targets which the market will be comfortable with. So yeah, I'm looking forward for this market to develop and to see a lot of innovation.
Felipe, what's your perspective in terms of kind of the structures formats investors are particularly interested in? Victor obviously mentioned the Uruguay set-down framework. What would you say are the downsides and the benefits for having this kind of two-way pricing between issuers and investors, and kind of how this framework has developed?
Yeah, I think in terms of structures, for us, there are two things. One is the use of proceeds transactions, which have proven their benefits, also their limits, as we mentioned before, in terms of sourcing enough amount of projects so you can ensure expenditures linked to that. So that's one of the trends. Then the other one is about the coupon link or the SLB concept. And we see that as a very positive evolution in terms of innovation. We think that that's a concept that still needs to prove their benefits. But we have seen transactions in the sovereign space in which the 25 basis points coupon step up, for which we have a $2 billion transaction, 25 basis points means $5 million. So $5 million do not constitute an incentive or a penalty for an issuer for which their annual budget is higher than $60 billion a year. So I think that the concept is nice, it's interesting, but 5 million coupon step up won't push that country to deliver on their climate target. And we have to be honest on that. So the problem is that once you say that about the coupon step up concept, what you have left? A conventional bond. That's it. So I think our suggestion to bankers and people working on those issues is that we need to have more technicality when it comes to choosing the coupon step up, so that actually reflects something meaningful for the issue itself. So that's something that I wanted to share. But also, I think during the COP discussions, and there was an interesting development, and we recently saw that case from, I think it was, I can't remember, Barbados, that printed for the first time a bond with a natural disaster clause. So here we're talking about not coupon step-ups, but coupon downs, depending on the eventuality of having a disaster. So the interesting concept is that if you have a coupon down because you have a natural disaster or climate-related disaster, that will allow some extra flexibility and liquidity for the government who is actually managing the situation. And I think that could actually ensure that we reduce the probability of a default, because investors will give the issuer some kind of oxygen in the case they are facing a climate disaster. So those are the concepts that are emerging, and we are very open to those. Of course, coupon down for an investor is not the biggest positive news in the world, but at the same time, if that ensure that we reduce the probability of default, I think that also makes sense. So very open to this type of discussion, and of course, the evolution of the SLB concept.
Isabel,
just one thing to add, sorry, before you move on. So yes, the 15 or 25 basis points, or 15 or 30 basis points is not a huge amount, but I think it is more about the reputational damage, which the issuers might want to avoid. So it's really not about the $5 million. It's about getting into the headlines as one of those who actually failed. As this year we had, I think, the first failure of an SLB bond that's coming from emerging markets and the corporate issuers. It was the PK and Orlen who had to pay step up coupons because they have missed one of their SLB covenants. So yeah, that can happen, and that was, I think we all heard about that. So that is really the risk of not meeting the KPIs, not necessarily the one step up.
Sure. Isabel, what's your take on all of this, and in terms of structures, formats that you're particularly interested in, and this Uruguay step down, step up, step up bond?
Yeah, well, on the structures, I mean, yeah, I'll echo also what Felipe said. So the green, social, and sustainability use of proceeds bonds are still very much of interest to us. Use of proceeds structure and the way that the use of proceeds bonds report is very useful for us in our reporting commitments as a fund, both under SFDR and like in general before SFDR even came. The way that we were able to report with the way that use of proceeds are broken down with those types of bonds, it's just much easier to meet our impact commitments that way. So we're still looking for use of proceeds at this point in time. My colleagues have already touched kind of on the financial aspects of the Uruguay bond, but also just on the environmental side. It was a very nice and innovative structure, actually, from a KPI perspective, that Uruguay bond. Firstly, the use of a strong NDC carbon reduction target is a credible KPI. Uruguay was lucky in that respect, in that their NDC was already well respected. Not all NDCs are regarded in the same way, but luckily Uruguay was able to use that. And secondly, using a KPI of the increase in forest cover as verified by satellite data is, the future of impact verification. We've spoken to many providers over the past year about using satellite data for verification of physical projects financed by green bonds. And I do think it's the next step in transparency on the green bond market.
Good. Felipe, you mentioned getting more technicality into all of this. How can we achieve that? How can that be done?
Yeah, well, I'm not working on that. I'm not an expert on pricing, but definitely what we'd like to see is that those coupon step ups actually become incentives for issuers to meet those targets, and not only reputation incentives, as Victor mentioned. I think that this is a financial market tool. We also want to see financial incentives linked to that, because so far the benefit of SLBs is about transparency, having the possibility to engage with the issuer for credit analysts, having more transparency. Those benefits, in my point of view, are still too soft. What we'd like to see is that the pricing of the structure really reflect incentives, so those issuers meet the targets, not because they are going to lose some reputational or some image, or they are going to have some image damage. No, because this is going to be costly, and if that's costly, then they will meet the targets. So that's the point of view. We recalled. If you want to go into more technicalities, I really suggest to look at the research from the Anthropocene Research Center that our friends from Ulf Andersson are working on, and they have published some research specifically on the pricing structure for SLBs. So we moved, because the 25 basis points became kind of a fashion. Like, you see different corporates using 25 or 20, and when you go ask those issuers, why have you chosen 20 or 25? They say that's market practice. So yeah, I think we need more technicality on that, and I suggest you go into the Anthropocene Research Center. They have done incredible work on that.
Yeah, and maybe we can share this with our audience as well, because I think it's an interesting thing. I'm conscious we're starting to come to the end. So one other question I had is, are more investors creating dedicated funds for the different types of GSS bonds that are out there? Joseph, maybe I can go to you on this one.
Sure. I don't think we have the level of issuance at this stage to make that a plausible option. I think that maybe in the future, when we have a greater universe to choose from and we have more bonds available, then that is something which does seem like it could be compelling from a commercial perspective. But I think just frankly, we just don't have the options available to us to action that. I think what the current approach that we're taking is that within our fund we have a kind of dedicated solution sleeve. So we have sections of the funds which are specifically assigned to promoting positive sustainability outcomes. So I think that given the current market, that's the approach which we'll continue to take. But I do think we'd be open to having dedicated funds in future if there is sufficient bonds available to make that reality.
Yeah. Any other kind of closing remarks or takeaways that you would like our audience to take away with them as well?
Not particularly. I think it's been a very interesting discussion, and thanks to my colleagues for sharing their thoughts also. And I think the main takeaway for me is that this is going to be a continuous learning experience, and it's going to take repeated and regular interaction between the investors, between the issuers, and also with the regulators as well. So all of the different parties are going to have to try to come together and work continuously to try and advance this market.
Yeah, lovely. Thank you so much, Joseph. Felipe, maybe I can go to you for this dedicated funds question, and then also any kind of closing remarks, takeaways for our audience as well.
Yeah, I mean, for the question on dedicated funds, I think that not only us, Mirova, of course, NNIP and other investors, we have proven that it's possible to have to create dedicated strategies, and it's possible both in terms of returns and also in terms of managing your risks, of course. So it's possible, it's feasible, and we are able to generate returns. Then my final word on this panel and in the sovereign space is that we really like to see that sovereigns use their labeled security program, their green bond program, as a way to actually green their own public deficit and to green their own stock of debt. And that, of course, requires a lot of political will, because once you have political will, then you will have the capacity to generate projects and assets, and then you will be able to print green bonds. But definitely, we like to see, let's say, for each year, a sovereign has a target in their public deficit. So if you have a public deficit of 100 billion, we ideally is to have 20% of that going into green. That would be absolutely marvelous to have this type of ambition in the market, and unfortunately is not currently the case.
Sure, thank you very much, Felipe. Victor, over to you for the question on dedicated funds and closing remarks and thoughts as well.
Yeah, I mean, for pure sovereign emerging market label bond fund, I think it's too early. I mean, it would be a possibility to build a portfolio, but it would be extremely biased towards a few high-grade issuers, so not providing the diversification benefits which otherwise investing in emerging market sovereigns provide. That said, on the corporate space, there is a substantial amount of quality label bonds, and we do run an Article 9 SDG, Emerging Market Corporate Bond Fund. So that is a possibility. We have a small allocation to sovereigns as well, but once again, running into the problems of reporting and the regulatory uncertainty of how to treat sovereigns. So there is I would say in a corporate space, there is definitely, the market is deep enough on the sovereign, not yet. And maybe just as one last thought, obviously we're working a lot to improve the quality of the issuance, and we are part, as many other investors, of the Emerging Market Investors Alliance, which has a dedicated label bond working group, and the EMEA has published last year an enhanced label bond principles, which I think could be quite useful for issuers as well, because we can lay down what are those additional characteristics we would like to see from issuers when they are coming to the market, either with use of proceeds bond or with SLBs, to make their framework even more robust and more acceptable for investors.
Okay, thank you very much, Victor. Isabel, last but not least, over to you for your final remarks and thoughts on the dedicated funds issue as well.
Well, we have a dedicated sovereign green bond strategy as well as a dedicated social bond strategy that we launched in June. So I think I might be a bit biased on this point, but yes, I think it's definitely possible. It's happening, it's going. Yeah, we're just trying to increase our outreach at the moment to the social and sustainability bond issuers, because we've been sort of mostly in the green bond space for the last few years. On SLBs, I think we're still sort of staying out of that space for the moment. Never say never, but we would like to see more adherence to the ICMA KPI registry for the KPIs going forward in the future. I think that would give a bit more of a robustness to the types of KPIs that are chosen on the market, and then, you know, potentially in the future, but at least not for now for us. On my final thought, I would just say for sovereign sort of use of proceeds issuance, be creative. We've mentioned it a couple of times, but we got a lot of repeat issuers. We've got a lot of repeat sectors. It's the same sectors over and over again in all of the green bond frameworks, which is fine. Of course, we love wind and solar farms and green buildings and clean transportation, trains. We love it, but we would like to see a bit more creativity in what you include. You know, we can include more unusual categories, and we can include sort of more unusual sectors in the green bond market, and sort of not often seen sovereign issuers as well. And I just think that, you know, the same issuers over and over again, the same sectors over and over again, there's just a lot of potential to widen the sovereign green bond market at this point in time.
Yeah, no, I think that's a very good point to end the conversation on as well. So thank you very much, and thank you very much to my panelists for joining me this morning. I'm going to pass back to Melissa Roach, who's Managing Director of the Sovereign Debt Institute, for kind of closing remarks and summaries. So Melissa, over to you.
Thank you, Emma, and thank you so much to everyone who has listened to today's sessions. It was great to hear some of the important advice given by recent debut issuers of green and sustainable bonds. The unanimous advice that Austria, Denmark, and New Zealand gave to incoming issuers were to not underestimate the work put in the planning phase, the importance of aligning ministries and key stakeholders at an early stage is key for such a project, and not forget all the post-issuance work and the reporting requirements. The quality of reporting is important, as well as maintaining simplicity in terms of the expenditures. And also do not underestimate the questions from ESG investors. ESG investors have different types of questions that are very technically specific, and they're not always easy for DMOs to answer, but very important to prepare for roadshows. We then heard from Iceland, Greece, and Cyprus on where they were on the road to issuing a debut GSS bond and the challenges sovereigns face when preparing to issue in comparison with corporate entities. Although it is an administrative burden to issue green or sustainable bonds, the feedback we've received today is it is worth it, while a lot of investors are focused on ESG products today. And it looks like 2023 will have a lot of sovereign issuance of GSS bonds, especially from countries that we wouldn't normally see issuing. So it is set to be a very good year in that respect. OMFIF will continue to organize and host the series of emerging market GSS workshops next year that are designed to help DMOs access the GSS bond markets through idea and advice sharing between expert intermediaries, investors, and experienced issuers. Our series this year had 60 sovereign issuers involved, either as speakers or attendees, and over 50 investors. Our first one next year will focus on Central and Eastern Europe. That will take place in March, then Africa in May, followed by Latin America in September. So do please watch out for further details on each of these events. We wish the upcoming issuers all the success on their deals for next year.
Thank you to the investors and the experienced issuers for their advice in today's forum. And a big thank you once again to Moody's, who have been our partners on this GSS bond program.